You're saying that B can compete in all those markets you just mentioned, which makes sense because the Chinese market is the most competitive. After all, if you win in the most competitive market, why can't you win in other markets? Look, BYD is in this two-horse race with Tesla in China. But I don't think that really diminishes what Tesla has accomplished. In fact, I think this was a record quarter for Tesla in China. This sounds like something out of science fiction, doesn't it? Well, hold on to your seats, because this incredible scenario might be closer than you think, fighting it out for supremacy in the EV market. But there are hints that their icy relationship is beginning to warm up as Tesla and its fierce rival BYD. The first sign of a possible change occurred in 2022 when Tesla started adding these German-made LFP batteries to some of its Model Y vehicles. This was a surprising move given their history as fierce rivals. This early cooperation suggests that both parties may be realizing the benefits of collaborating, but how will this collaboration help both businesses and ultimately affect Tesla's valuation and stock price? Let's explore these options, but first be sure to address those that include and subscribe buttons. Enough said, let's get going. A representative for BYD stated in an interview that they were hesitant to enter the U.S. market due to its complexity, pointing out the ambiguity around regulations pertaining to infrastructure, pricing, and consumer options. The spokeswoman stressed that while the U.S. has complicated and restrictive policies that prevent manufacturers from fully adopting EV technology in spite of the difficulties, China's government is making it clear that businesses must invest in EVs or risk falling behind. The spokesman emphasized the significance of fair competition and an open market, which are fundamental principles of the U.S. market. However, given the increasing influence of China in countries such as Mexico, American automakers are paying attention. Executives from Stellantis and Ford, among others, have voiced concerns about the competitive threat posed by Chinese automakers. Do you agree that, in the absence of trade barriers, Chinese businesses could fairly compete and potentially even dominate the market? Well, there's another angle to think about. Take BYD, for instance. In addition, let's draw a parallel from automotive history. When Japanese brands entered the U.S. market decades ago, there were similar fears, but local brands found ways to thrive alongside foreign competition. It's likely that in the realm of electric cars, concerns about Chinese competition may be overblown. Meanwhile, Tesla's profit margins are under pressure and may continue this trend for a few months despite some remaining bullish sentiments. They have invested in manufacturing in Mexico, focusing on the local market rather than crossing borders into the U.S. The truth is that many investors may be disappointed if Tesla's profitability declines this year. What do you think? Are you still optimistic about Tesla? If so, please let me know. You may find out who else owns shares in pro-Tesla optimism for those who are bullish on the company and have a keen eye for uncovering the next hidden gem in the stock market. There's more to this remarkable growth than simply watching it from the sidelines, according to our friends at Seeking Alpha. Your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for Tesla stock price innovation from Tesla and everything must go on. The ideal strategy is to seek alpha. Online sources of Tesla news avoid the negative coverage of the company by focusing only on the facts. For a great discount, click the link in the description. But what if Tesla modifies its strategy to increase the price of its stock? What if they choose to collaborate with their fiercest opponent, creating an innovative alliance in the EV industry? And automobs consider the potential beyond just batteries. A Tesla-BYD collaboration could pioneer advancements in battery tech, autonomous driving, and other critical areas of EV development. Together, they could slash production costs, making EVs more accessible to a broader audience. This united front could solidify their dominance in the EV market, hastening the shift away from gas-powered vehicles. But let's get to the bottom line. How would this collaboration impact Tesla's valuation and stock price? While it's not a guaranteed path to success, the potential gains from a strategic partnership with BYD are substantial. Such an alliance could instill greater investor confidence in Tesla's long-term vision and its ability to dominate the EV market. This positive outlook could in turn drive up Tesla's stock price. Moreover, the collaboration could lead to increased market share and faster growth, solidifying Tesla's position as a leader in the EV revolution and potentially resulting in a higher valuation. Of course, internal resistance within both companies and the challenge of striking the right balance between collaboration and competition could pose hurdles. However, a well-structured partnership could be a game-changer for the EV industry, benefiting both Tesla and BYD, while accelerating the global transition towards sustainable transportation. Who knows, it might even lead to a happy ending for Tesla's stock price. In other news, BYD, the leading manufacturer of EVs, just revealed the U9, an ultra-luxury sports car sold in China for a whopping $233,000. This latest model highlights BYD's goal to compete at every price point. Last year, I had the chance to speak with Stella Li, the Executive Vice President and CEO of BYD America, about the company's evolution and its aspirations in markets outside of China. According to Li, BYD observes similar patterns of EV adoption in nations like Brazil, Thailand, and Israel, mirroring China's trajectory over the past 10 years. This strategy helped BYD surpass Tesla as the largest EV maker. Li emphasized that BYD's success in China's extremely competitive market bodes well for the company's expansion abroad. She also emphasized BYD's focus on innovation, positioning the company as a technology leader in addition to providing chic and modern designs. Li expressed confidence in BYD's ability to compete in these markets. With Brazil now underway, Li disclosed plans for manufacturing facilities in Hungary and Thailand. Meanwhile, in Mexico, BYD intends to unveil plans for a facility in the second half of this year that will serve the country's south or central region. Meanwhile, other investors see a chance to fund the company's larger technological projects despite the recent drop in Tesla's shares. Beyond EVs, particularly considering the pricing now in comparison to a few years ago. Although not all experts are as upbeat as they are, Mark Houghton, an investment director at JAM Investments, predicts that a number of obstacles, such as price reductions and probable declines in demand, will prevent Tesla's stock from ever reaching $300. In 2022, Tesla generated a total revenue of $81.5 billion, with an impressive operating income of $13.7 billion, translating to a robust margin of 16.8%. This stands in stark contrast to its U.S. counterparts, Ford and General Motors, which typically operate at 16.8%. Tesla's remarkable profit margins set it apart among its automotive peers. Regarding single-digit margins, Tesla's profitability is attributed to a number of factors. Firstly, its well-known brand eliminates the need for massive advertising costs. Furthermore, effective management has increased battery production capacity through vertical integration, optimized manufacturing processes, and avoided dealership networks by selling directly to customers. These tactics improve margins and boost earnings. Additionally, Tesla is at the forefront of AI-powered self-driving software and is well-positioned to enter the autonomous robot taxi industry by 2024. Early estimates from ARK Invest indicate that self-driving cars might open up a $14 trillion market by 2027, which would further fuel Tesla's growth. Demand for Tesla's entry into the residential solar and battery storage markets has risen dramatically, with deployments of battery storage capacity rising by 360% year-over-year in Q1 of this year. Despite differing viewpoints on the Cybertruck's design, Tesla may diversify its offers by introducing the Optimus humanoid robot by 2027, catering to low-skilled job areas like manufacturing. As the electric vehicle industry grows, fans like Alex Shannon from San Diego, who recently purchased a Cybertruck despite ordering one sight unseen, are drawn to Tesla's innovative approach. The truck's futuristic appearance and electric performance moved him to tears upon delivery. It's evident that they serve distinct markets. Conversely, Tesla maintains its growth trajectory despite recent price concerns. Margin-affecting cuts despite swings in the price of Tesla's shares. The company's ambitions to drop prices by 50% for its upcoming generation of vehicles represent a commitment to retaining profitable while ensuring accessibility to a wider user base. Acknowledging the company's continuous recovery and the possibility of future increases is crucial, even though some experts are concerned about Tesla's margin. Remaining positive about Tesla's direction might result in substantial gains for investors, as the company's pursuit of a mass-market approach may ultimately prove to be more profitable. As for the prospect of a Tesla BYD, that concludes this video. Please remember to like and subscribe to our channel, which is dedicated to Tesla Insights. We hope to see you in our upcoming videos.